you all teach people how to get this funding, right? But how do I prepare to get money from a bank? What do I need to start? Because before we get into what to do with the money, let's secure the money first. But the securing of the money comes with some responsibility on part of the person.
Yeah.
What is that responsibility? What has
as far as like the requirements to apply?
Yeah, so the first, we like to get the personal credit together. So you have to meet certain criteria of what the banks want you to meet. Once you meet those criteria, then you're eligible to be able to get access to the capital. So that's along the lines of having nothing negative. A lot of people always have like little medical bills, like I only owe this, I only got this little account, and it's like, well, the banks see that you're not even responsible with $100. Why would we lend you out $10,000? It doesn't make sense.
Like your cousin.
Yeah. So make sure everything's a clean slate. No negative, no late payments, no derogatory marks, no collections, and then we also have to build it properly as well.
Okay, hold on. Let's back up. Because we're saying make sure there's no lates, make sure there's no negatives. But if I'm in a position where I have lates and I have negatives, is it a wrap for me?
It is not a wrap for you. We have to take care of it though immediately and like now, because it's a process. It's not always going to be overnight that we can clean it up or get it back to, straight, but you have to go through the process.
Gotcha.
So that's the process of cleaning it up, credit repair, if you have to, educating yourself on it, because a lot of people is a little gray area with paying other people. You can do it yourself if you educate yourself, or there is people out here that will be able to clean it up for you. Just got to pay.
Do you help with that?
I transition more into the getting you access to the capital and now business growth more so than just credit repair. I used to do it, so I started at. Shout out to RPX, but I don't do it anymore.
Gotcha. So you started with credit repair, and then you moved into, let's just get funding. Let me work with the people who are in somewhat of a position to do it, right? Who are like responsible.
Yeah, for the most part. If you meet these criteria, then we can get you access. But otherwise, I can send you to someone, a resource of mine to be able to clean it, and then you come back to me.
I actually trust you more with the funding because you did credit repair first. So you're going to understand the game. What are you saying?
Just so people watching, like those type of individuals don't feel left out, it's a lot of ways, even without going through full credit repair, that you can fix your credit. Like, for example, for me, when I first started, I had a 520 score. And what some of the things you could do is, like, let's say if you have a collection or you're late payment, you could literally call up whoever the creditor is and just say, hey, look, listen, if I pay you this, can we do a pay to delete letter? So that's one of the things I did early on. So I owed, who did I owe? I owed Sprint. Sprint send you your last bill.
Sprint, bro.
Sprint send your last bill. Sprint sent my last bill to a different address. I didn't know about it. You pay off your bill, but then it so happened it's a balance they didn't tell you about fees. It was like $190. So I said, look, listen, I give you all $100 right now. You take it off. They were like, yeah. But I said, I need a letter stating that you're going to remove this. So when I get that letter, I'm going to give you my card info. We were literally on the phone, like quicker to draw type of thing. So I got the email. I gave him the last 4 digits of the card, and then it removed like that. And then also, when I first got started in real estate, I was a real estate agent. So I had to kind of become a credit repair expert to help my clients be able to get approved so I can make money. One of the things that a lot of people have they have maxed out credit cards. So Herman was one client. She had an Old Navy credit card that was $1,000. She owed $900 on it. Her credit score was like a 610 or it was like a 590 or something like that. She put $800 on that card, brought it down to 100, brought her utilization all the way down to 10%. Her score went up 100 points.
Dang.
Because she only had one card. So that one card messed the whole thing up. When you got 10 different cards, then it fluctuates. She had one card, and that literally jumped her up. So put it in this perspective. She was able to become a homeowner off of paying $800. So sometimes it's not even full-blown credit repair. Sometimes like paying down one of your $500 card down to $50, or calling a creditor and say, look, listen, I remember my barber did this. He owed somebody $4,000. He called him right on the phone. I told him, he did it while he was cutting my hair. He said, I got $2,000 right now. He took it right off his report. 30 days later, it wasn't showing no more.
And the name of the letter is?
Pay to delete.
Pay to delete.
Yeah.
So get a pay to delete letter. Okay, that's good.
So you get full-blown credit repair, but just for people that's listening, like that's one or two ways you could do it just on your own today.
Yeah. Yeah, because there are some people who are like really in the mud. Like you
gotta talk.
Don't pay your bills. And he like, it's really like, don't talk to me either. I'm a connection with somebody because you need to fix some other stuff.
I'm sending to you. You gonna send it somewhere else.
I was working at the Cheesecake Factory. I didn't have a whole lot of money, but I was just like mildly irresponsible. You know what I mean?
Yeah.
And I just need to pay it. You know, I was just paying minimum. So that's some good information. What you saying?
Yeah, I was going to add on to that, right? Because it just comes down to like education, number one, right? So simple as getting on the phone. If you look at all three of your credit reports, so you got Experian, Equifax, TransUnion. By law, everything on those credit reports should be the same. It should be accurate, right? So if your address is not the same, they might have 123 Main Road on Experian, but on Equifax say 123 Main Street. If that doesn't match up, you need to dispute it and get it updated, right? You may have a collection with Sprint and it says June of 2012, but on TransUnion it says May of 2014. So just looking at your credit report and making sure that it's accurate, because the creditors don't always report the information the right way. So just as simple, look at your report, get on the phone, call them up, and have those conversations. You could just start repaying your credit that way before you go and pay somebody thousands of dollars. Got you.
Do you see a lot of entrepreneurs that have bad credit?
Absolutely, definitely.
What do you think that's the cause of? Do you think the cause is, and this may hurt a little bit for somebody, do you think the cause is going after a dream and getting in debt and not paying it off, and now you have bad credit? Is entrepreneurship the cause of the bad credit?
Sometimes, but a lot of times it just starts from the root of not being financially literate. And back in the household, like most of us didn't learn about credit until we were older and found out that, oh shit, credit's important. We need this to live. We need this to grow businesses. We need this for financial freedom. So a lot of people just didn't have that education. So they made bad decisions, bad choices very early on in their age. And now they're just living with it. And at a point where they're like, okay, I want to educate myself about how credit works, how to use it, how to properly leverage it. But then I do see entrepreneurs who use their personal credit to fund their business. And then this is where like me and her step in, like, no, your business can have its own credit profile where you keep your personal and credit separate. Like that's law. So if anything goes down in your business, it doesn't affect you personally.
So it's a bad idea to fund a business in your personal.
It's a terrible idea.
Yeah, horrible.
It's a terrible idea to fund your business with your personal credit.
Why is it such a terrible idea? I mean, if you get a business, and I found it too, and I'm going to ask you. Okay, let me just start here. I'm going to get to your question.
Okay.
So this is my first time meeting you, right? Mm-hmm. Is this my first time meeting you?
Yeah.
Okay.
Maybe.
I saw a post the other day.
Okay.
Oh, you remember? You remember?
It literally just hit me when you said what you said when I asked the question. So Kevin,
I got my drink.
Oh, yeah.
You didn't know where it was going? I knew where it was going.
Just cut it.
This joint hit me like, because
You was like, yo, I know you.
Let's do it.
I said, I think I remember because we just said your name. Okay, because for y'all don't know, so Herman and Brian, I know them. They've been on the podcast. I rock with these guys. And they were doing a business together with Lex, right? And I'm just meeting you today. And when you said it, I said, hold on, is this the person Kevin? So you made it a post. I'm so glad you're here.
Now he's
so I want to hear your perspective.
Bye.
You said you can literally start your LLC, get your free EIN number, and legally walk in the bank to get $30,000 without showing any documentation.
Yeah.
Then use those funds to start passive income streams. Let me show you how. So Kev on stage, being Kev on stage,
he's like, with a gun?
Yo, right.
With a gun? You can't. Listen, I chuckled. I'm not gonna lie, I cackled. I chuckled. It was a good one.
Okay.
When she dropped it in the group chat, I'm looking at it, I'm like, hold on, I gotta go defend my girl. Like, bro, stick to comedy, bro. Like, legit.
Okay, can you explain your defense? Because the way he said it too, it made you sound crazy.
Yeah.
But now that I know that you're right with these guys, I'm like, okay, there got to be some validity to this.
I'm actually gonna go to the bank today to respond to that. But so basically,
I said the rebuttal.
Oh yeah, definitely. So basically what I'm saying is like you can get funding on a new LLC. Credit is going to be a factor in doing so, but it's how you do it. So I could start a new LLC today, get all my proper documentation, get my EIN number, and then go to a bank like Chase or KeyBank to get funding. Now there's different types of funding that you can get that doesn't require documentation, like a credit card and sometimes even lines of credit. But when you're getting loans and depending on how much you're getting, then that's when certain documentation is going to require, because if you're going to get it in your business name, then lenders are going to want to see that your business can support this loan. So like a credit card is probably one of the easiest things to get without showing any sort of documentation, as long as you have the credit, as long as you can PG and show that you are good. Yeah, be a personal guarantor. Okay. And show that you have a great history, borrowing history, then that's easy. 30, 50K.
Boom.
New
so
LLC.
you can walk into
She'll show you
predicated on your credit, right? You can start a business today. Get an EIN number. Sometimes it takes a little while to get the EIN number, right?
Yeah. A few days.
Or two, but
yeah, a few
sometimes you
days.
get it on the spot. But
Okay. So you get the EIN number. You can walk into a bank and say, hey, I have this new business. I want to open a bank account.
Right.
And I want to get a credit card, and they'll give you up to $50,000. You get $50,000
Yeah.
in credit.
The higher your personal credit, the older your personal credit cards, right? Yeah.
So if you already have personal credit cards,
right, that have been aged, like you have good personal credit. So because the banks are going to look at you this way, if you're taking care of your personal credit, they're like, all right, you're going to take care of your business's credit. Yeah. So and then the lines on the business side are a lot higher on the business. On
you
the
get
business
10
side than
times
the
more.
personal.
Yeah.
Yeah. So they're not going to give you a regular $5,000 limit on a business side. They know you're running a business.
Exactly.
So you need more capital. So that's why, to the uneducated, it sounds crazy.
Are you calling Kevin on stage uneducated?
Listen,
Yeah.
listen.
I mean, I couldn't.
He
said I said what I said.
I said what I said because my man came at my girl. It's like I'm playing. No, some people just don't know, and it's our job to educate.
Right.
So
right.
no shade to Kev, but no, it is possible, and I can't wait for her to get her rebuttal, walk into the bank, and walk out with 20, 30, 50, and she pit stitch it real quick, do a remix reel, make that junk go viral.
So you're gonna document it. You're gonna
yeah.
Coming.
Yeah, the
Definitely.
response is coming.
I mean, I couldn't say all the steps in a 180 character Twitter post.
It's
So
a
it's
tweet.
like,
Yeah.
I redirect everybody to come to, I do a free workshop every single week. And that's 3 hours straight. So just talking about how to properly structure your LLC, your business, how to get your personal credit right, and how to run these plays. Because it's very, very possible. And a lot of us just don't know about it.
Dang, how'd you feel though when you saw it?
I would think about my comeback.
Honestly, I know you think about the comeback, but was that your first thought, or did you think something? Were you nervous?
Honestly, I didn't even watch the video. I got tagged in it. He didn't tag me in it. It was a lot of people tagging me. It was a lot of my followers who did remixes, just defending me. I didn't even really have to talk for real.
You watched the video though.
I really did. Did I watch the video? I didn't watch it.
You didn't see the video?
I didn't watch it. I know about it, but I didn't watch
I
it.
watched it twice.
All these
watch
people
it.
tagging you, you didn't see what people are tagging you in.
Protect the energy.
Energy goes where energy
Yeah,
flows.
I
But you
don't
know
read
it's negative
comments.
until you watch it.
I already know
Other
because
comments you can tell.
his comment was like, "This not true," and then a lot of people I was getting dragged on Twitter and everything. But I had people remix to defend me, so I ain't really had to talk for real. I had a lot of people.
You saw a
defending
shoulder
me.
I think
shrug.
this happened.
I ain't had to talk for real.
I
So
think this happened to all of us, and you just
yeah,
like I ain't gonna watch it. It is what it is. I have too many. We have too many receipts to
yeah,
engage in
you could
conversations like
Google
that.
me
Yeah.
like for real.
Yo, what's going on, y'all? My name is Brian Waldron, Brooklyn, New York. I've been blessed to start a successful events-based business in Brooklyn, New York, with one of the highest rents in the country. And we've just been fortunate to show other people. And I was actually able to scale my business through credit. Because a lot of times people look at it, and I'm gonna be a little contrarian again for a second. I actually did what Herman recommended against, where I used my own credit card to go and start my business. It was a business credit card, but I was able to leverage my personal credit to use it to scale my business. And a lot of people ask like, oh, should I wait till I have all, this thing structured and things like that. My personal opinion on it, if you have an opportunity right in front of you and it's a good opportunity, go and take it. Like, I'm not going to wait for months and years or whatever the case may be. This is just me, my personal opinion. I'm not going to wait months and years to get into the game because, I'm waiting for this one particular document or something like that. If I have an opportunity right in front of me right now that's going to make me some money and change my life, I'm going to jump on it right now. Yeah. You know what I'm saying? So I was able to scale my events-based business with a $25,000 Chase Ink Unlimited credit card, and we were able to turn that into $3.5 million with that. And then we were able to take that money, go buy more real estate, go buy Airbnbs, go buy cars, and then just keep on building and building and building. So credit has been
$3.5 million with an event space.
Yeah, 100%. 100%.
And how long?
4 years.
I've had my event space for a long time. I did not make $3.5 million.
I remember we spoke about it.
I just trash.
I remember that. Yeah. But that's the biggest thing that we're going to be talking about. That's the biggest thing that we're going to be talking about, because a lot of people, they talk about the funding, they talk about at the end of the day, if you don't do anything with this money, it's debt.
Yeah.
Period, point blank, period.
Yeah.
If you don't take this money that Lex is going to show you how to get, that Herm's going to show you how to get, it is debt. That's it. You have a loan and you're not doing anything with it, it's debt. So we're going to show you how to take that money and go and get cash flow, because that's literally how I built my empire. I used that credit card and I was able to get my event space. I went with the event space, I go started my throne rental company. With the throne rental company, I went and bought a building. With the building, I bought another building. So we just keep on building and building and building. But if I never had that credit foundation, it would have never happened.
This seems like a dope formula, though. It almost, did anyone write about this in terms of like fix your personal credit, then get business credit, then invest in a business?
Yeah, the funding
It seems
blueprint.
like the whole
Yeah.
seems like the whole formula to wealth, doesn't it?
It's the
Yeah,
funding
because
blueprint.
This like
steps.
completes
Should
the
be a book.
circle.
Yeah.
It should. It should. You gonna write one, y'all?
Y'all should really write a book on that.
Not
'Cause that-
ChatGPT.
I mean, as I'm
Yo, that's not a bad idea, actually.
It's not.
Just really write the book on it. Yeah, facts.
as I'm thinking about even my journey, it was, I've always been like an entrepreneur, but never really made much. But I think even going through the process of fixing my credit taught me the value of money through that process. So I think without that education of, okay, you got to learn how to pay bills, you got to learn how to manage your money, I don't think I could have even taken a next step to properly fund a business, because like my life wasn't being funded properly.
Wow. That's
And outside of like getting the score, that process is amazing, isn't it?
Yeah,
Yeah.
definitely.
You learn a lot
Definitely.
about
It's
stuff,
definitely
learn
a
about
process.
money, learn about discipline also. You know what's interesting about these conversations, especially what happened to you over the weekend, is that to our population, it's cap or it's not possible.
Right.
I remember when somebody said that under one of my posts, it's like, that's not true. You can't get $50,000 from a bank. I've done it 100 times. I've showed the receipts for it. But I responded to him and I was like, you are responding to me on a phone that you probably financed, right? You are responding to me on a phone where Steve Jobs probably went into debt to create this product, to start a business. You are talking to me on an application that the CEOs and the founders of Instagram, they went into debt to start this application and now it's worth billions of dollars. But you're under my post telling me that 50,000 is not possible.
Get him.
Come back.
Pinned it to the top.
Yeah.
Dang, that's a fact.
Yeah, like, but because I'm saying it is cap.
Yeah.
Yeah.
But you're using these devices that they went into debt, had a business plan, executed on the plan, and now it's worth billions. And I'm trying to tell you, you can do it too. It is possible.
Yeah.
And I'm trying to educate you on that. But a play with business credit, a good one for you, right? If your business is over 2 years old, right? You walk in and you ask for this business credit card. You can also ask for a business line of credit at the same time. And it'll be the same inquiry. So you can get 2 lines of money with 1 inquiry.
From the bank, though.
From the same bank, yeah. I imagine doing that at 2-3 banks. So you got a line of credit and you got a credit card. The same inquiry.
Here's what I don't understand, though.
Okay.
For you, who you have the resources to buy the stuff that you need,
Mm-hmm.
well, why would you get all this credit?
All right. That's
You know what I mean? Like, why would you get the credit that, I mean, obviously you pay it off, because I use my cards for everything, but I pay it off by the end of the month, so it's no interest. So it doesn't, it's like no harm, no foul. I'm not
Okay.
paying anything for it
Okay.
anyway. I just get the benefits.
All right.
We get all these lines of credit
Mhm.
to do what with? When I could just,
To leverage to make more money. So your $100,000 in cash can only go so far, right? But if you had $1 million in credit, you just 10x yourself to make more money. It's all about leveraging other people's money to make money. That's what it is. So that's why, to me, there's no cap on how much credit that I can get or I could get, because my cash is always limited, but credit is way more.
got you.
Right.
So you got millions in line of credit.
Millions in credit.
So you can go buy a $2 million building with the line of credits. Yes?
I could. I would have to pull it all together, but that's just a mess.
Right.
But with, I can get a $2 million building, right? And only have to put 100 or 200,000 down to get it,
Why is that?
right? Because, you just got to put a down payment to get it, right?
Yeah.
So I can leverage my credit. I get my line. I got a couple lines of credit that are $100,000, right? That'll probably cost me $1,400 a month to pay those 200. Right. So I'm taking that $200,000 in credit to put down, and now I have access to $2 million in real estate.
Yes.
And no money came out of my pocket. That's why credit is so important. So now I'm leveraging it. So
That's
never
really cool.
cap yourself. So my money, my cash stays in my pocket. I'm leveraging the bank's money. Cash out refi to $2 million. Use credit to fix it up and turn it into $5 million.
Yeah.
You know what I'm saying? So
I have a building, and I was contemplating paying it off, right? And then I'd own it free and clear.
Right.
Is that a good strategy?
To pay off the building?
Yeah.
It depends on what you're trying to do. I don't always recommend paying off something because there's an opportunity cost, right, to you paying cash for it. So say, for instance, the building was $100,000. You had in debt, and you got $100,000 sitting in your bank account. Be like, yeah, let me just pay this off, right? So I'm not paying interest, but it's cheap money. You're paying 3-4% on that $100,000 in this property, right? Yeah. You can take your $100,000 in cash and go do another deal that can make you money. But once you put it in the property, it's gone.
Kinda, because I can leverage the property's equity to get another property. Am I
all
right?
Right. So you have, but now, right now, you have the equity in the property, and you have $100,000 cash.
I have the equity in the property,
and you have the cash, right? So why you're going to take the cash to pay off the property? Now you just have.
But I don't have equity in the property though. Let's say, for instance, it was. Let's say it's $200,000, and you bought it. It's worth $200,000, and your loan is $200,000.
You did a bad real estate deal.
I mean,
so in real estate, you got to make money when you sign the paperwork. Right, there has to be equity when you bought it.
But the property that I bought, it didn't have any equity in it. Okay. But for what I need it for, it's perfect.
Okay.
Right, so I can make more money off of that.
Okay.
Right. So, especially in this economy, it's really hard to find commercial property with equity already baked into it.
Right.
You know what I mean? And plus, it's hard calculating commercial property, whatever. But I got it because for my purpose, the place, the location, it's going to be perfect. And I know it'll go up later, right?
Right.
So right now, I'm paying interest every single month on this money.
Right.
Why don't I just take the cash that I have, pay it off, and then I don't have to pay that interest anymore every single month?
Okay. And then you're going to take the money out of the deal anyway, right?
Probably at some point.
And then
until let's say, for instance, it's 4 months before I do something with the money.
What if there's an emergency?
I mean, I got more money.
You're going to fight me on this one, aren't you?
Absolutely.
You're going to fight me.
Because I'm trying to understand. Because I'm trying to understand why not. Because a couple of people told me why. There's a reason I shouldn't, because a bunch of people told me that I shouldn't.
Right. It's costing you money.
I'm trying to see how
the debt.
So let's say, for instance, right now. So right now, I'll tell you, my mortgage is almost $3,000 a month, or $2,700, something like that, and I'm paying that every single month. So if I don't do anything with this money that I have for 4 months, that's me paying $10,000, a little over $10,000.
What if I come to you with a play? I'm like, Dave, $20,000, right? I can flip it, give you $30,000 next month.
I have $20,000.
So because you have more money, extra money, you're going to put this money and pay it off the debt, right?
I was thinking.
All right. But again, that still doesn't negate what I'm telling you, that your cash can make you money in other places. The cash that you will make in other places will always outweigh the interest you're saving on paying down the debt on the house, because it's super cheap money. So like people who are in credit card debt, I'll tell them, yo, take that cash and pay it off, because your credit card interest is like 20%, right? Where are you going to make 20%?
Right.
Nowhere. Well, you can. There's some plays, right? But, you know, right? I know a guy, right? I know a guy. But paying that off makes sense. That credit card debt makes sense. But if you got a property, you're paying such cheap interest. Nah, it doesn't make sense. Because I can definitely make more than 3 to 4% on $100,000 someplace else. That's why I wouldn't recommend always paying off that debt. Doesn't make sense. Get it? The 3 to 4% that you're paying on that debt, right? that 100,000 you could put so many other places that's going to make you more than 3 to 4%.
Like what?
Buying more real estate. Or, say for instance, you went and bought a truck. Say when you went and bought a truck for $100,000, that truck is going to make you $10,000 a month. But the interest is you $2,500.
It seems like this 2,700 or whatever, it's just going out the window.
It's not, bro.
And it's not doing anything.
Jay-Z's $100 million house in Calabasas, you think he don't have a mortgage on that? There's a mortgage on that. He's a billionaire.
There's a mortgage on that.
There's a mortgage on that thing. Because his money's making money other places.
Maybe it's just some things I don't understand, Herm, just yet.
I gotta bend your mind.
So if there's another opportunity, so you're saying I should spend my efforts figuring out what I'm going to do with this money that's going to make it more
money, right? Not necessarily paying off cheap debt.
Cheap debt is considered what?
Good debt.
I'm saying, no, what is a percentage of cheap debt?
And cheap debt is anything that I know if I took the money, it'll make money someplace else. So 3 to 4% is cheap to me because I know I can get it someplace. So there's a certain number you get to where it's not cheap.
Right now, when interest rates are high, people don't buy as much. This is what it is. A lot of lenders are not getting as many mortgage applications or refi applications because the interest rates are higher.
Right.
So when interest rates are high, people don't buy as much. When people don't buy as much, what do people do when the house is on the market?
They lower the price.
Exactly. When the price is lower, what can people like all of us do? Buy it cheaper. I just had a mentee. They just closed on a property. They wanted $80,000 for the house. He just got it for $57,000, $58,000. Mind you, he only has to put down floors, paint, and change the kitchen. But it's already worth, which is like 20 grand he's spending. But I talked with the lender for him, and we got it up to 30. So he's gonna make a quick 10 in between. But now the house is worth 130. So now you can go into these cheaper deals and pick them up even cheaper, and then you could do something in 30 days, make 10 quick 20, 30 grand, $25,000 in between, and 30. Well, total will be 60 days. So now is a good time to go in and get these quick pops in and out. But hold on that money, bring it back to my brother, and now you can go in and stack that money to go into the bigger place. So this is the market to go make the in-between moves, stack that cash up 2024, go right, when I say 2024, later on this year, then dump it right back into the bigger stuff.
Got you. So
ping pong.
If I don't have the money or even the 20%, is that where you come in with the funding?
Yeah, you need 15 grand. Boom.
Because you're gonna need something. Most people are in a position where they don't have access to the capital for the most part. That's from what I know.
63% of people don't start.
So are y'all saying that I can not have any money? Say for instance, there's $100,000 building, and the bank is requiring me to put down 20%, which is $20,000. It's gonna be a great investment. If I need $20,000, which is the 20% of the purchase price, I can come to you and get $20,000?
Yes. You can come to me to get $20,000. I would rather you, I ask you, would you rather spend somebody else's money instead of your money? If I said, David, all right, I got $20,000, just give me back $200 a month and I'll let you borrow $20,000. Would you say yes to that?
Kind of depends, bro.
And I said I'll give it to you for 0% interest for 12 months.
But why would you do that?
Because that's what the bank does. So take advantage of it.
He thinking that you're gonna mess up and not make that money back in a year, and then your interest rate go to 20%, 30% on a credit card.
So is the strategy
they betting against you?
So the strategy for the bank is betting against you in terms of they're saying, I give you 0% interest for 12 months, but I'm betting that in 12 months you'll still owe me money.
Mm-hmm. For the most part. And some people get in that predicament, but you gotta be smart and make quicker plays. But you also too are gonna make money while you're spending money too. I like that concept too. Instead of spending cash, when we spend money off our credit cards, what do we get? Cash back or rewards points. Everybody like to travel. Everybody like to make money when we spending money. I would rather us make money while we spending money instead of making nothing off every dollar we spend. That
makes sense. So let's say I pay my bills, credit's good. Give me like the three most important things that you need to guarantee. Well, you can't guarantee. I'm not going to say guarantee on this podcast. But you can pretty much ensure there's a good possibility that you'll be able to get them 20, 30 grand to invest. And is this on a credit card that you got to like liquidate and then go buy this property?
So for the most part, it's just really two things. It's properly structured LLC, because a lot of people structure their businesses improperly. And it's the requirements on the personal side. So once you meet the 680 to a 700 credit score, no negatives, a built mixture of credit report, because a lot of people do that wrong as well. It's literally those two components. And then we good. I mean, then you said for credit cards or loans, I typically don't even go for loans. I literally go directly to credit cards because it's easier to get approved. If you want to get a $200,000 loan, you want documentation, you want tax return, you want bank statements or check stubs or something like that. I can go in the bank and get $200,000 over small increments with no documentation, no paycheck stubs, no tax return. And most people are not in a position where their business has been open 2 years. So if your business has been open 2 years, you don't have no tax return, you don't have no bank statements and all that stuff. Now you have an entry level where you can get the money at a quicker fashion.
I want to pull this up real quick. And actually, the person he was talking about was actually here, and it was really, really funny. Let me find this real quick. Okay, so and I want to hear your response to this. So Kevin on stage made a video, and this is what he said. Let me show it. Let you listen to what it says.
So also on the internet, this lady said you can start your LLC, get your free EIN number, and walk into the bank and get $30,000 without any documentation. Yes, you can. If you have a gun and you rob the bank. I don't think you'll get $30,000, but you'll probably get $3,000 and go to jail. Anything other than that, it's not possible. I'm sorry, guys. We have to work. We have to work. We have to work. We gotta work. People gotta work. We gotta work. That's the way it is. People gotta work. You gotta work. They're not giving you $30,000. You're gonna be at work.
That pisses me
the
off.
only way that you can start a business and go get $30,000 is walking into a bank with a gun. What say you?
He said, it sounded like he said with your EIN only.
Well, so this I'm going to tell you what Lex said. This is what Lex said. I'm going to show it to you one more time.
Yeah.
Also on the internet, this lady said you can start your LLC, get your free EIN number, and walk into the bank and get $30,000 without any documentation.
Yeah. He's only mentioning you getting the LLC and the EIN number, right. Which 100% he's right that you can't go get $30,000. I'm saying to leverage the personal with the LLC. Now it's a whole different ballgame. I can start my.
I think that's what she was saying too.
Yeah. I can start my LLC 2 days ago and be able to still get access to $50K, $100,000 by leveraging my personal side. So it's personal guarantor. You go in the bank, they ask you to personal guarantor it, meaning we can pull your personal credit to see how good it is, but we're going to approve you for this amount on your business side to be able to get you the money. So then it also only reports on the business side. So we don't have to worry about if it's going to report on our personal side, which we like that. That's why we love the word business credit so much, because we can leverage the business to do it. It's going to report on our business side. And we don't have to so much worry about utilization now. So on the personal side, when we start, maxing out our credit cards, credit score go down, we can't get access to no more money. We leverage the business side when we get approved for the business credit cards to invest that money so that now we can continue to either get access to more capital and continue to keep investing.
So Kevin's wrong in his assumption
to what he said.
Y'all know Lex? Y'all know Lex?
Lex, I know Lex.
Because I think she's saying the same thing. I mean, obviously, she's like, "Yo, you can start a." Obviously, there's like more stuff to it. Like you actually
little pieces.
Yeah, you got to find a bank. Maybe one of them denies, but you got to find a bank. You got to actually bring. You have to have something. You have to have good credit. You feel me? They're not giving a bum off the street.
Yeah,
it's 30,000, right? So,
right.
But there are scenarios where someone is literally a decision away from getting access to $30,000.
Hell yeah.
Yeah, that's how I changed my life. That's how I started. All the things I started. I didn't really have no money. I had to use this route to be able to get access to all the money I needed to start my businesses. If I didn't have credit, I don't believe I be successful as I am or make it to where I am if I don't use credit. I don't think I can raise the capital to do so, because how long would it take someone to save $50,000 in a regular lifetime without credit? Some people never even come
You
up to
making $20 an hour, and you working 8 hours a day,
you got rent.
40 hours a week, and you still got rent, you got mortgage, you got car note, you got insurance, you got all that stuff.
Kids.
You making $40,000 a year. How the hell you gonna save 50 grand a year?
It's almost impossible.
Math don't even math.
It's
you know what I'm saying?
impossible.
So that
It's
type of
almost-
stuff pisses me off. Just save and buy it the regular way.
No.
How, Sway? How you gonna do that? You feel me? Like how that stuff, like people be in the comments saying that stuff pisses me off. Like how? So basically saying chalk your wealth, push your wealth all the way back because you're telling me that you feel some type of way that I want to do it a smarter way, easier way, a more creative way, but that doesn't sit right with you. So you're telling me to stop and push it back. The math don't math. You make 40 grand a year before taxes, and then you got all your responsibilities, and then I need 50 grand to go and buy this house.
You say you make $40,000 a year.
How?
And you got bills. You got to eat.
Got
Sometimes, you know what I mean?
Got leverage.
You got kids. Like how? You know what I mean?
So I want to break something down for you, Dave, for everybody that's listening, right? Because I'm on Instagram and I get a lot of pushback because I teach you how to buy commercial real estate with no money down strategies, right?
No money down.
Yeah. And they people like,
None?
that's not true. No money down. You know,
It's not true.
It's not true.
It's not true.
So obviously you have to put money down, but it doesn't have to be money from
Exactly.
you. So I want to break down exact situation that I did so that everybody could kind of get the picture and literally utilizing all of our strategies.
Gotcha.
All right. So a couple years ago, I was 2020, right? I went and purchased the property. Well, I got a property under contract, single family. So it's a single family property, like boom. Last time I was on the podcast, I talked about the family legacy meeting, right? All that cool stuff. So had my family legacy meeting, try to see who else around me has good credit. So my cousin, who's a correction officer, he worked 40, 60 hours a week, know nothing about credit, real estate, or anything, but he has an 800 credit score. Didn't know it, right?
He didn't even know it.
He didn't know it. He just pays his bills on time. He's a responsible person.
That's lit.
But now that I expose him to the opportunity of investing and how he can make money passively, he's interested. So I put him on my LLC on an operating agreement as a member and got him $45,000 in 24 hours.
Whoa, hold on. You have an LLC that's been in business obviously over 2 years.
Correct.
So you can take someone and put them on your operating agreement.
Yep.
Is it still considered a business loan or a personal loan?
It's a business credit card. So I got him a Chase business credit card, $45,000.
So he got a Chase business credit card, $45,000, simply by you putting him on your LLC because now it looks like it's been his business for however long.
Correct.
And now he's got a business credit card.
And he stuck with nothing, just an 800 credit score and putting him on the business. He has no prior knowledge of anything. So I'm sharing that because this could be somebody who, as long as you obviously have the information, but it doesn't stop there, right? So $45,000, I found a property, we got it under contract, we leveraged hard money, only had to come to the table with about $12,000, right?
Explain the leverage hard money.
So hard money, you find a property, they're gonna give you 70% loan to value, right? So as long as you get the property under contract at the right price, they'll give you as much money as possible, and you just gotta cover closing costs. So I had to come to the table with about $8,000. So hard money is these lenders that give out money to buy real estate.
Yeah.
Right? So I go to my cousin. Now I could have put the $8,000 out of my own pocket, but I went to my cousin to say have him invest because I wanted him to be a believer. Now that I got him $45,000, but I'm sharing this because at this point I still haven't used any of my own money. Right? I put him on my business, $45,000 Chase credit card, got the property on the contract. $8,000 is the down payment. So we pulled the money off the credit card, the $45,000, and put it down into down payment to contract the property.
8,000 out of the 45.
Correct.
Gotcha.
And then we took off an extra $30,000 to float the construction because I have to pay the contractors to.
I see. So you maxed out the card.
You max out the card.
Okay.
But with the Chase card, they give you cash back and rewards. So when you spend over $15,000 in 3 months, they give you $750 back cash back.
Okay.
So because we maxed out the cards, $750 cash back, that covered the minimum payment for a couple months. So now you got no minimum payment because he leveraged the cash back. We bought a property, fixed it up, sold the property, made $120,000 profit. Profit, right? So now the $120,000 profit pay off the credit card, that $45,000 back, and gave him 20% return on his money back to his pocket. So he used none of his own money and got paid passively. And I just did a deal, no money out of my pocket, right?
That's hard.
Now it don't stop there,
That's
right? Because then we thinking long term. So I did this back in 2020, right? So now probably had about $70,000-$80,000 that I was able to now take, and I put it into a life insurance policy because you got to pay tax on capital gains. I didn't want to do that at the time, so I put it into a life insurance policy that grows compound interest, right? So that $80,000 that I put in the life insurance policy, it grew to about $116,000, where I got 3 storage facilities right now in the contract, and my down payment on that is $95,000.
Boom.
I borrowed the money off my life insurance, and that's my down payment on the 3 facilities. So now, none of my own money, but I started with a credit card, getting my cousin on board with my LLC, going and getting a single family, flipping it, turning it into 3 storage facilities that's generating $20,000 a month.
So 24 hours
Goodness
to
gracious.
short term to long term.
Plus the money that I borrowed from the life insurance policy, my down payment is still growing because it's in the policy to get compound interest. So I'm still making money on that money. And that's another strategy as far as like refi, what I plan to do later on with the facility to put the money back.
Man.
Then he missed a piece too. What I was saying it, he said float the construction. So when you hard money, they give you the money to fix up the house. You just have to start and they pay you back. So the $30,000 he spent that month, he didn't have to wait till the house sold to get that money back. They wired him that money that same week.
Yeah.
So the credit card got paid off way before the house even sold. So for people that's worried about, my credit card is for a couple months, credit card got paid off.
Yo, all that stuff said, and it's so real and it's so practical when you put it like that. You know what I mean? Like anybody can do it. You know what it really sounds like? It sounds like, you know, the one guy, he was like, all right, if you want to be an entrepreneur, first you get an LLC. And then you buy a Komodo dragon, right?
You take a
But he
Komodo
said it like that.
dragon.
It sounds like that. But it's really, like if you really break down what you said, anybody can do it.
Yeah.
If we can start out with good credit. So moral of the story is you can make millions if you pay your bills on time.
Pretty much.
Damn,
one-
yeah,
or
you put it
find
like
A lot
that.
of ways to skin a
Or
cat.
fine.
That's one way. Yeah.
That's
Yeah.
crazy. And we just don't know.
Yeah.
Yeah.
You know what I mean? While I was working at the Cheesecake Factory, I didn't know. Like I can pay my bills, and if I paid my bills, people would give me money.
Yeah.
And if I understood what to do with the money, I could start building generational wealth. I had no idea.
Or it's another route. You can be able to get money off generating revenue in your business too. So a lot of people that make a lot of money, they don't care about credit. It's another route you get lending from.
What do you mean?
Generating revenue. So if your business, David Chance, I don't know how much money you make, but if you bringing
Nothing crazy.
if you bringing in $200,000 a month,
rich
something like
without
that.
saying
No,
rich.
depending on how much you bringing in a month, banks will lend you money based off how money you make monthly consistently. So there's lenders out here that will give you money based off if you've been making a certain amount of money per month. I'll say $20,000 a month, $10,000 a month for a 6-month period of time consistently. Then they will lend you out money as well. So there's other lending options. You can use other things as collateral. I used my own money as collateral one time to build it up so I can get access to more money before I even had good credit too. That's another route too. So there's different routes. You just gotta be creative. You just gotta be educating yourself on different routes of what you could use.
Right. There's 2 sides to every coin. And as a journalist, it's my responsibility to ask the question of the other side, because all this could go terribly wrong. Yes,
Well, yeah, absolutely.
it could.
It has.
It has.
I want to share that too, because that's a great point. Because yes, I can tell you this worked and I did it X, Y, Z. But before that happened, I was in a bad deal, right? Because I paid contractors to do a job, didn't do my due diligence, right? I bought a property on an auction, and when you buy them on the auctions online, it's a blind sale. So you're just buying them. It's cheap, but you don't know what you get, right? So I was over leveraged, and again, to be transparent, the reason why I had to go and do the family legacy meeting and leverage my cousin, because I was over leveraged at the time.
Oh,
because
wow.
I invested wrong. I maxed out my credit cards. I'm like, damn, I'm strapped. But in that process, I learned what I did wrong. So now I said, because I have the information, who could I pull around me that's going to help me get back in the game? And that's how I got back on track. That's hard. And now, go from there.
That's hard.
And you know I always gotta add something.
Talk to me, please.
I always gotta add
Your
something.
ad-libs,
I gotta add something.
you got the Jeezy ad-libs. You know what I mean?
Yeah, I gotta add something. So
Add so much to the song.
yeah, I think also, well, two things. One, you have to find someone, whether it's a mentor, friend or mentor, have to find someone that's already doing the stuff so you can learn. It doesn't make sense to trip if someone already walked 10 miles before you. Just follow their steps. Yeah. They already said a pothole there, you go to the right a little bit. But also, I think you can't lose, but it can be delayed. So, for example, if you buy right, so like I was telling you, all properties we buy them off market, we get them as cheap as humanly possible. So when you buy right and buy cheap, you're never going to lose. Even if you like borrow a little too much money or, you know, spend a little extra than you thought. If you bought, let's say for example, you plan to spend $50,000 on this property fix up, end up costing you $70,000. But if you bought the house for $50 and it's worth, let's just say $250 when it's all said and done, even though you spent a little bit more money than you thought, it's still a whole lot of room left over. So what we do in our business, we make sure that we get it cheap as humanly possible. That way, if we call it oh shit money, we can build in oh shit money within the deal. So if I'm factoring in a 15% contingency, 20% if something goes wrong, we already factored in. Yeah. So that way, if the deal goes over leverage, like we're still going to make money. The problem is, let's say for example, he says 70% loan to value. So what that means, if you have a property that's when everything is said and done worth $100,000, the lender will give you up to $70,000. That means you got to buy it and fix it up within the 70. You buy it for 20, put 50 into it. Buy it for 50, put 20 into it. However you chop it down, that's your max. We buy deals 65% of the LZ. So we already under what you give. So that way, if the deal goes south a little bit, 1%, now you 1% over. We go over 1%. We go over 3%. We still under the math. Yeah. So like, I think it just comes down to making sure like, don't be all fast, just buy right. But the only way you really gonna know that is you tap in with somebody that's telling you that information and just not be so excited. I think people get so excited and just like, I just want to buy something. I just want to buy something. Older guy told me this not a long time ago, like 2 years ago. He said, wrong with y'all generation now, y'all want to buy a house just because it look cool.
It does look cool though.
Yeah, like the hell yeah, it looks cool, but you know, but then you in jams where like, dang. So more to bring the whole thing full circle, your bag may be delayed another month or two, but you're not going to lose because you bought it right the first time. Now, some people buy messed up, and then they at the closing table getting a check for $1,000, or I've seen people where it got so bad where they was negative at the closing table selling it. Yeah, because they bought super wrong. Like, yo, Shan said he got a deal for me in Atlanta. Like, it's Shan's, I gotta buy it. Like, they attach your brand to the deal. That's two separate things. So that's stuff that
I want to get into this trifecta of what you guys like came together, because I really do feel like this is the perfect storm. I mean, personal credit, fix your personal credit, then start getting loans or credit in your business name,
not your personal, right?
Then take the money from the business, take the money, like the created money from the business credit profile and put it into a business.
Right. That creates cash flow.
That creates cash flow. It can't be as simple as it sounds though.
Okay.
It is though, but it's just a process.
Is it?
Process.
Yeah, it's simple. It's simple. It's just following the steps, having patience. And educating yourself. And
having the blueprint.
Share with me the steps or the blueprint.
Lex, would you like to be?
Because I know there's somebody like, yo, it sounds. Did y'all see the guy? He made the video. He was like, all right, first you want to get an LLC, and then you buy a monkey, and then you move to Venus,
and buy NBC.
Now you own NBC.
Classic. That thing was classic.
That's really how they be doing though.
I felt attacked.
I felt attacked.
Okay, let's get some steps in here. Somebody y'all got to talk to my man David, who works at the Cheesecake Factory right now. He's a server, and he wants more from his life. And he's listening. Okay, fix my credit, get some business credit, put some money into a business. But there's intricacies in all of it.
Yes.
Right? So give me some steps that, like, David can take this information and say, okay, I could do this today.
Getting out the Cheesecake Factory.
Come on, man. I'm talking to younger me right now.
Okay. So first you need to look at your credit.
Okay.
First you got to be educated on what is reporting to your credit report. So You want to get credit monitoring. I recommend using either Identity IQ or Smart Credit. Okay. That's going to give you access to all 3 credit bureaus, Experian, Equifax, and TransUnion for like $20 a month. And once you look at your credit report, now you're going to go in investigating mode and identify inaccuracies on your credit, incomplete information on your credit. 9 times out of 10, those things are up there. We looked at thousands of credit reports.
Inaccuracies and
incomplete
information. Like what?
Like if we look at an account on someone's credit report, just looking at the basis of what's reporting, you have the account number, the name, the balance, the payment history, things like that. So sometimes it's blank. Like sometimes the date open might be blanked, or payment history might be skipped, or across all 3 bureaus, that same account has 3 totally different information. So the credit bureaus are governed by a law called the FCRA, the Fair Credit Reporting Act. And one of those laws that they have is that you must report accurate and complete information. And like I said, 9 times out of 10, they do not. So it's just a lot of us do not take the time out to even look at our credit report and see what's up there. We just go with the win. So I'm sure if you look at your credit report right now, you have a negative account. It's mismatched information or incomplete information. So now you have the ability to dispute that account with the credit bureaus and requesting that they remove it because it's inaccurate or incomplete.
Gotcha. Okay.
Yep, that's just one tactic.
Gotcha.
So once you analyze what's on your credit report, you're going to dispute all negative accounts on your credit. So that's collections, charge-offs, late payments, any excessive inquiries. You want to get those accounts removed. But that takes a process because it could take anywhere between 30 to 45 days for the bureaus to respond to that dispute. But what I like to tell people to do is call them, harass the bureaus, and get it all faster. Most people aren't doing that. And you could get on a phone with the right person and can remove things off the spot. I've done it many times before. It's just going to take that consistency. In the meantime, as you're repairing your credit, the flip side is building your credit. So you have to build your credit. When we was doing credit repair, a lot of people were just like, oh, I'm going to sit back, relax, and let y'all fix my credit. But then they realize you still got low credit scores. You still have bad credit because you haven't actually built your credit up. So most of us grew up in an environment where our elders told us, don't get a credit card. Credit cards are bad.
Oh, for sure.
Don't get loans. Loans are bad, right? But credit cards are actually responsible for 30% of your credit score. It's a huge, huge chunk. So not having a credit card reporting is going to not give you your optimum credit score. Right. And on top of that, you want to build up good personal credit limits, because then that's going to give you the ability to 10x that on a business side. So if I have a $10,000 credit card reporting to my personal credit score, and let's say I've had that for 6 months or a year, 100% payment history, it's going to be easy for me to get a $30K, $50K on my business side just from that reporting on my personal. So you want to continue to build your personal credit. It's not until you get at least 10 accounts reporting to your personal credit scores until that you're considered having a really good profile.
Really? 10 accounts?
10 plus accounts. 10
Including
plus accounts.
What?
Credit cards, loans. So those are the 2 types of accounts.
Yeah,
it could be open or closed though, but 10 plus accounts.
10 plus accounts.
Yes. A lot of us want to ride out with one credit card.
I got 10.
You better check your. Yeah.
I don't know if I got. So I got.
Check his credit card.
Personal though.
So like credit cards, car notes, student loans, mortgages,
and it could be open or closed.
I think my challenge is I have a bunch of business stuff at this point.
That's okay.
So I got 6 cards. Well, I have 6, 7. Probably got like 8 cards now.
Business,
but 3 of them are business.
Okay.
So I probably got like 3 or 4 personal. Mm-hmm. I don't have any cars on my personal profile.
You don't have any credit cards?
Cars.
Oh,
but you had before though, right?
Auto
loan. Yeah, I did. I paid it off.
Okay.
Let me get another one.
It was a while ago, like 2016. I got a car, but I got 1 car I got 2 cars in one of my business names and 1 car in another business name. But are you saying I need to make sure I get a car in my personal name now?
Yeah, because that's going to help. That's called mix of credit. So the more mix of credit you have, that would be like a mortgage, an auto loan, credit card.
I don't know why my credit was getting real funny lately. Like it wasn't It wasn't hitting like it was supposed to hit.
You got a mortgage loan?
No, I don't have a mortgage.
Oh,
Our house is in my wife's name.
Oh, okay.
Cause she had a job at the time when we got our house.
Yeah.
And I wasn't paying taxes, so I'm paying taxes now.
But you could have did a bank statement loan, where they just look at the past 3 months of your business bank statements and give you a loan.
But I didn't. I'm thinking. I'm listening to.
You didn't
Herman,
have the funding
and I'm
blueprint.
Wow.
I'm listening to Herman, and he's saying get everything in your business name. And I'm just but I just through this financial process, I'm thinking, okay, I'm hearing, okay, get everything in your business name, get everything in your business name, and I never really considered that I need more stuff in my personal name.
I think if I could just add a little piece here, I think what Lex is, and please correct me if I'm wrong.
And I shut down 2 of my personal cards because I didn't like the fact. And it was
that's wild.
Yeah, that's why your credit score.
Y'all gotta understand. And let me tell you the headache. So I had Capital One. This was like my first Credit One. Whatever one. It started off with like a $200 limit. But I had it for maybe like 13 years. But the problem was they were charging me like $6 a month.
I have one too. First Premier. I got it when I was
First Premier. That was it. First Premier.
Oh my God.
$6 a month. I got it since I was 17. I'm 42. They still taking the $6. I will never close it because mine is 20 years old, bro.
They did not let me do automated payments.
What?
Yeah, you
have to pay it every month.
Every month. Yeah.
I couldn't do it, bro. I'm thinking in my head, this is the most frustrating. My whole life is on automated
that
payments.
Inconvenience, bro. Cars.
I shut down 2 or 3 cars. I just felt I was.
Yeah,
I can't go in there.
That definitely.
Yeah, mine is list 42. My limit is 900 on that card. I'll never close it.
Crazy.
They gonna get
My
that
joint
$6 till I die.
Yeah.
And it's been a hard time getting it back up
because you can't replicate age.
Yeah.
It just has to. Your other cards have to start to age out, and then your scores will slowly go back up.
Yeah.
Yeah, I got a credit card since I was 18. I ain't never closed it.
Never closing that, bro.
I ain't never closed it.
Listen to these financial gurus, man. I'm just
Guru, bro.
Whoa.
I don't even call a guru or influencer.
I'm an entrepreneur sharing my knowledge.
Nah, this is good information. This is good to know, especially for entrepreneurs where you think, didn't y'all hear that too? Resell, like, yo, get stuff in your business name because you got to get your, you know what I mean? You got to get your LLC and then you buy the NBC.
And then you buy NBC.
And then you buy NBC.
And you get a bajillion dollars in your business name.
And that's why we have the funding blueprint to give clarity to all of this.
Right.
Yes.
But you still want to give stuff in your business name. You're just literally alley-ooping using your personal credit.
Correct.
Put it in your business name.
But it doesn't report on my personal.
Exactly. But you're using, because in your business, in order for you to get capital in your business name using your LLC, you either have to have good credit or business revenue or some sort of collateral. One of the 3. So most new businesses or even seasoned business owners do not have the revenue to show for their business to get capital without using their personal credit. So in order for you to like completely not use your personal credit, you have to be making money in your business and you have to have established business credit. Like at that point, now your business has the credit and has the revenue to show the banks that this is a stable entity that has, 2 years of consistent revenue and established business credit report. So that should be your ultimate goal for your business. But starting out, it's like you starting fresh. You don't got business credit built. You don't have any money coming in. So you're just leveraging your personal credit to help your business get up and running.
If I could add just a little bit of that, and again, like Lex, forgive me if I had like misconstrued or anything, but it's kind of, I think, and this kind of goes back to what Kev on stage was saying. I think a lot of people, when they hear people talk about, oh yeah, you can walk into the bank with a brand new LLC, they're thinking that you just literally made the LLC today, you walk in with only the LLC, and that's it. That's not exactly how it works, at least when you're brand new, and y'all forgive me, like, let me like add anything if you want. You're lending off your you're using the power of your personal credit to go and amplify that. So it's kind of like, all right, say for example, I know Herm, but I don't know Lex, and Lex comes to me like, Brian, I want to take out some money. I don't really know you, but I know Herm. And Herm vouches for Lex. That's kind of how your personal credit is working. That's what essentially a PG is, a personal guarantee. Your personal credit is vouching for your business, like what Herm was saying. Like, I don't know Brian Waldron Enterprises, but I know Brian Waldron. Brian Waldron been a pretty cool guy. He been paying his bills on time, so I'm gonna rock with him. Brian Waldron Enterprises, I don't really know you, bro, but Brian Waldron vouched for you, so I'm gonna lend you that money. And because you're a business, I'm gonna give you a little bit more. That's essentially what a PG is. So when you walk into a bank and say, hey, look, listen, I have Brian Waldron Enterprises, can you lend me $50,000? They're gonna take a peek at Brian Waldron Enterprise. Ooh, Brian Waldron Enterprise. You was just open a couple of days, but Brian, my guy, I know you, bro. I see you. This your man's.
Yeah.
I'm gonna lend him some money. That's essentially what's happening during the underwriting process, and that's essentially what happens when you walk into a bank with an LLC and you get the $50,000. So I think that's the big misconception a lot of times, because people hear, oh wait, I'm gonna just get an LLC and I'm gonna get $100,000. Yes and no. That personal credit got to be right, which is why in the funding blueprint, we take you through those steps. Fix that personal credit, use the personal credit to establish good business credit, use established business credit to go and fund your business.
Got it. Okay. I made some mistakes.
You're human, bro.
You got 6 business credit cards. You did okay, though.
Yeah, we're doing fine. It's just, I couldn't, like I be seeing my credit score, man, and it's like.
It's that card you close, bro. Those 2 you close. That's major.
Yeah.
But over time,
it's
you'll
so
be fine.
annoying,
Can I ask you
bro.
a question? When you started your podcast, did you fund your podcast out of pocket?
Did I fund my podcast? Yeah, absolutely.
Or was it thousands, hundreds?
I bought a camera
Okay.
and some microphones, and we got busy.
So it
Put on
started
YouTube.
small.
Yeah, 100%.
So it wasn't much investment.
No.
Okay.
It wasn't a lot.
Okay. So you started just reinvesting in your business as.
Yes. So I started with t-shirts, and that was my whole journey of like my personal credit. And this was a true story. This guy, I was about to sell somebody like 40% of my company for like $20,000. My t-shirt brand Sleep is for Suckers, because I needed $20,000. Don't judge me.
What? Wow.
Bruh, I'm thinking in my mind, for one, I never had $20,000 before in my hand. So I'm like, yo, if this person gives me $20,000, this is all I need to make it a multi-million-dollar business. And then we're gonna just exit the business, $3 million. And then I give that person their 20%, $600,000, multi-millionaire. It's up.
It's up. And this before you knew about credit.
Credit.
And leverage.
This before.
Right. Because the bank could have did that and not asked for equity.
Equity.
Yeah, yo, this guy, so actually my friend's brother, Spade, so shouts out to Spade. He said, we were talking, he was like, yo, I like what you're doing with the brand. He's like, yo, I'm gonna invest. I'm like, all right, bet. So I'm on this line. I put together a little presentation and all that. I'm on like, yo, what's up that money? You know what I mean? I give you the percentage. And for some reason, there was just a delay and he just never gave me the money. But I ran across this guy, his name's Robert Gould. Shouts out to Robert Gould. And he was like, yo, let me show you how to fix your credit. And like, this is right after I'm a server, but I remember as a server, like if anybody gave me an American Express card,
They had money.
they were, for one, most of them were white. Anytime I saw a black person with an American Express card, I'm like, how you do that? Where you get that from? This is in my mind.
Yeah.
Bro, in my mind, white people get American Express cards. Black people have bad credit.
Wow.
Every comedian knows this.
Wow.
Right? The jokes in our community is black people are back. I came up understanding that, right?
Right.
So fast forward, he teaches me how to fix my credit. This is all personal stuff, right? And he was like, yo, you should apply for an American Express card. I'm like, I'm black. I don't know why I'm thinking this way. Like, I didn't say that, but I'm like, I know I ain't gonna get on Amex. But if I did, it's up. I'm going out tonight. So I applied and I got approved for $20,000.
Wow.
Look at God. And it was it's been up ever since.
If he would have gave me the money, I probably would have lost the money and then I just be back to square one. But that showed me the only thing I have to do to get an investor is fix my credit.
Yeah. So put everything in your business name. Nothing's in my name whatsoever. Right. Once everything is in your name, you got your EIN, you got your LLC, then you want to go get some funding, go to different banks and get this money.
How many businesses do you have? How many businesses?
22.
You have 22.
22 businesses, right? And then I probably got like 50 or 60 LLCs just sitting around.
50 or 60 LLCs
Yeah,
sitting around.
right. Every 30 days, I buy a couple.
Why?
Because I'm going to fund them later.
You're going to fund. All right, we got to explain it, bro, because I'm lost.
So it's just a piece of paper, right?
Yeah.
Until I give it life, right? How do I give this LLC life? Number one, you get the LLC, you get the EIN, right? And then I have to position the LLC to look like a person, right? What does a person have? You have a name, you have an address, you have a phone number, right? So you got to do the same thing for the LLC. You're going to give it a name. But you have to be careful the name that you give the business, because that can stop how much funding you can get. So I do real estate, but my company name, Bellastone Enterprises, isn't called Bellastone Real Estate, because real estate is a high risk industry. If it's a high risk industry, they can deny you funding or give you, like, instead of a $10,000 credit card, they give you like a $3,000 credit card.
Dang, one of my companies got real estate in it.
Right. So you gotta be careful. Then you give it a phone number, right? You have a phone number, your business has to have a phone number, not your cell phone number. And banks can tell if it's a real business phone number or not. So a good place to go get these phone numbers is freedomvoice.com is a real good one. I send my clients to. It's only $10 a month. So you get like a 1-800 number, you're looking real professional. All right. Then you go get a business address. You have a nice building right here. There's a business address right here. Not everybody can afford this. So go get a virtual address where you just rent the address and attach it to your business. Get a business website, because you got to look professional, because your Twitter handle, your Instagram handle is not enough.
You got 80 websites, bro?
So when it's time for me to fund it, I go do it. A website is like $100, bro.
Yeah.
Yeah, it ain't nothing crazy.
But the business doesn't actually do anything.
No, not for now. Not till I wake it up.
But you'll go get the funding for it first.
No, I wake it up and I tell the business, all right, this business is going to sell white paint. Or this business is, a general one I always use is business consultation, right? So I say you do business consultation. You do business consultation, get the website, and knock it out.
Okay, so you got all these LLCs, and how many of them do you have active?
Active, 22.
You have 22.
22. When it got all
like
of them
a headache, like a nightmare and headache.
Now when you're trying to raise the capital, make a move, I don't got to ask anybody for the money.
How much you got?
How much what?
Like lines of credit through all your 22?
Millions.
Millions?
Yeah, millions altogether.
Just access to capital.
Access to capital, yeah. I get a towel.
That's wild.
Yeah, thank you.
That's
how many website domains do you have?
Too many. I got like 100 something.
All right. Imagine getting 10,000 for each of them or 100 grand for each of them.
Yeah, but I was doing it because I'll come up with a really cool idea. You know what I mean? I'm like, oh, I got to keep this website.
Funny story. So we at my guy's house, Rick Ross's house, and then he talks about financial polygamy, right? So I go and ask
financial polygamy,
right? Talk to him about that. So I go to talk to Eric. I'm like, all right, Eric, I got a quick question for you. He's like, hold on real quick. I was like, what you doing? Oh, financialpolygamy.com. He's right on it.
Oh, wow.
Yeah, he got right on it.
Oh, wow.
Yeah.
That's crazy. All right, so here's the thing. So like Shopify and Stripe, they be trying to give me funding, but I don't take it. I'm like, I don't need your money, especially with it's like high interest.
I wouldn't go to Shopify. I wouldn't go to them. I'll go to the banks. It's 0% interest for the money. If it's up to 12 months, why would you?
And then what is it after that?
It goes up crazy. Probably goes up 15, 20%. But guess what? Run it back and do it again. Go to a different bank.
See, I just be using my own bread. I mean, obviously I got, credit cards and stuff like that, but I paid off at the end of the month. I don't be wanting to use high interest. And maybe I just don't understand the strategy behind. Give me an example of something that you use this funding for.
Trucking.
Okay.
Right. So I know trucking is a high risk industry too. So Olivia Monroe Enterprises, that's the name of my other daughter's company. And that company does trucking. So, but I can't put that in the business name because that's a high risk industry. So Olivia Monroe does what? Business consulting. Go get a $25,000 business credit card because my credit is good. I personally guarantee it, but the debt is in my business's name. $25,000, go put down on a truck, right? And then I got 0% interest for a year. So now I'm running it up on a truck that's making 4 or 5 figures a month, pay down the debt. And I'm using money to make money.
Because it's free, no interest for a year. You should be able to get
so
that
like a $25,000 credit card, bro, the note on that is like $250 a month, $200 a month.
No interest.
No interest. And then my job is to pay down the debt, crush it within a year.
Okay. Okay, but you said if you personally guarantee the loan,
Mm-hmm.
but you get the truck in your business name,
Mhm.
the debt is to your business, but that's the purpose of the personal guarantee, isn't it? It'll go against you too.
So yeah, it goes on me too, but it's not on my personal credit report.
You don't see it every month.
You don't see it every
Absolutely.
month, right?
Got it.
So now that this debt is not on my personal side, I can continue to run it up over and over again.
Got it.
Yeah.
Okay. All right. So I actually, maybe I did this wrong.
Mhm.
I just bought a van.
Right.
I'm going to get wrapped. But I did buy it in my business name. I
Good.
did do a personal guarantee.
Good.
I put down a lot of money on it though.
Okay.
Something wrong with that? Or?
No, there's nothing wrong with that. It all depends on your credit. Bank of America is a really good place to go and get.
No, they gave me a lot. I mean, they would have gave it to me. It's the same rate. I just decided to put, because I don't be wanting to pay a high note every month. And if I got the cash, I just dump it in.
You just dump it in.
Should I not have done that?
No, that's fine. That's fine.
That's cool.
Yeah, that's a good idea.
Okay.
That's a good
Okay.
idea.
All right. So what are some of the elements that's needed? How can I start doing business credit without a personal guarantee though?
So there's a couple. First of all, the industry has changed, right? So there's a couple of banks you can go to. Divvy, D-I-V-V-I-Y is one. Capital on Tap is another. Where these banks, they don't care about personal guarantees whatsoever.
Yeah.
If you got some revenue coming in, they're going to ask for the last 90 days of your bank statements. And then they'll give you some money based on that. So they can give you 25, 30 grand. And that's a great way to start. If you are a new business, right? Couple months old, nothing too crazy. Your credit's not good yet. That's a good place for you to start. No personal guarantee business credit cards.
Yeah, I guess I would imagine the interest is higher.
It's relative. It's pretty much the same thing like all the other
Really?
credit cards.
Why would they do that then?
Because these industries, these banks, these lenders started to see, hey, if a business is making 100,000, 200,000, 300,000, they know what they're doing. So just because their credit isn't bad, let's give them a shot.
I see. That actually makes sense.
Right.
Because I guess they're in tune with the world of people know how to go make some money.
Right.
It's just tax filing and credit handling, stuff like that. But they know how to go get the money.
Right. And then they got your bank docs. They got documentation. So when I'm sending you to these other banks, these credit unions or regular bigger banks, you got a 680 credit score minimum, you're getting in the door, but we don't want minimums. We want high capital. When you go in there, they're just going based on your credit. They're not asking for documentation or anything like that. And they'll give you a $25,000 credit card because you're personally guaranteeing it.
What's the highest line of credit that you've received?
$100,000.
$100,000?
Yeah. 100. Yeah, from Key Bank. It's my favorite bank. It's a regional bank. It's in Philly. It's in Chicago, New York.
Did you use it?
Yeah, I used it. And
what'd you use it
that $100,000 to buy more trucks.
Oh, so trucking is your thing?
Yeah.
Oh, so your daughter's business.
Right, Olivia Monroe Enterprise. Yeah, so that's the trucking company. So I bought like 5-6 trucks with it.
It's making money?
Yeah, it's doing okay.
A little something.
Yeah, a little something.
Give me some other places that you parked your money.
Real estate. Yeah, trucking and real estate. Why I lean on those more heavier is that trucking gives cash, nice cash flow. The asset is depreciating, of course, because the truck got miles on it. But I purchased real estate for longevity, for wealth, right? The returns are a lot smaller. I make a little $200-$300 per property, but I have an asset that's continued to appreciate, and I can use that to help out with the tax burdens.
Got it. So you don't put a lot of money down to purchase real estate? So let's say there's a $500,000. Well, give me an example of a property that you use, and I want to know. And I'll ask some questions on that specific situation.
Okay. So I see a property for $100,000, right? Based on my relationship with my lenders, they might ask me to put 10%.
Nah, give me a real scenario. Like a real property that you've acquired and how you got it.
Northeast Philly, it's a duplex. The property is $110,000, right? The rent, probably $2,500 a month for it.
Dang.
Yeah, $2,500 a month. We put down 10%, but I leveraged a business credit card to do it, to get into that deal. Because that's when I really first started in the game and I had no money, right? So I took the cash off the credit card, put the down payment, went to a hard money lender for the rest of the money.
Dang.
Right? And now I have this property that's cash flowing $2,500 a month. And it's probably costing me $900 a month to maintain it.
Dang, you leveraged everything.
Yeah, you leverage everything.
How did you pay back the hard money lenders?
Refinance the house.
Okay, walk me through the whole process.
So after I got the property,
Yeah.
closed on it, right? I went back to the same lender. And I'm like, hey, I got the lease. It's making $2,500 a month. I like to refinance it into a 30-year mortgage. Now it's a fixed rate. Because that hard money lender is really expensive.
100%.
Right. But now it's refinanced to like 3-4%. And now I have this
They
asset.
get their money back, pay the credit card off.
Yeah, pay the credit card
Now
off.
you just got this
Now I got this asset.
creative.
So rinse and repeat.